Today I'm revealing 3 companies revolutionizing the future of energy, and you can get in on the action this August. These aren't just any companies, they're industry titans poised for explosive growth. We're talking about a global energy leader pivoting to renewables, a US clean energy pioneer, and a worldwide renewable giant. Each stock is a unique chance to grow your wealth and invest in a sustainable future. We'll dive into their numbers, strategies, and why they're must-watch picks right now. Hit the like button, let's get 1,000 likes on this one, share the video and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Ready to power up your portfolio? Let's jump in. First up is TotalEnergies, ticker TTE, a French multinational that's not just an oil company anymore but a global energy leader in the midst of a dramatic transformation. Once known primarily for its oil and gas operations, TotalEnergies is now on a mission to become a renewable powerhouse, reshaping its entire business model for a low-carbon future. Unlike legacy oil companies stuck in the past, TotalEnergies is aggressively investing billions in solar and wind projects worldwide. Their approach is bold. They're not just dabbling in renewables, but making them a core part of their business. From sprawling solar farms in the Middle East to massive wind projects off the coast of Europe, TotalEnergies is building a truly global green energy portfolio. Their strategy is both simple and smart. Use the steady profits from their traditional oil and gas business to fund a massive shift into green energy. This approach creates a unique blend of stability and growth for investors. By reinvesting fossil fuel profits into renewables, they're future-proofing the company while still delivering strong returns today. Financially, TotalEnergies is rock solid. They boast a fortress balance sheet, huge free cash flow, and a dividend yield that outpaces most savings accounts. Their disciplined capital allocation means they can reward shareholders while still investing heavily in the future. For income-focused investors, that reliable dividend is a major draw, especially in today's uncertain markets. With operations in over 130 countries, TotalEnergies enjoys global diversification and risk protection. This worldwide reach allows them to tap into the best opportunities wherever they arise, whether it's solar in India, wind in the North Sea, or natural gas in the United States. Their international presence also helps them weather regional downturns and regulatory changes. They're also a top player in liquefied natural gas, or LNG, a crucial bridge fuel as the world transitions from coal and oil to renewables. LNG is cleaner than traditional fossil fuels and is in high demand as countries seek to lower their carbon footprints without sacrificing energy security. As global demand for cleaner energy rises, TotalEnergies' LNG business is set to soar. They're expanding their LNG infrastructure, signing long-term contracts, and positioning themselves as a key supplier to both developed and emerging markets. This gives them a powerful growth engine that complements their renewables push. Leadership is a huge part of their success. CEO Patrick Pouyanné and his team are forward-thinking, setting ambitious targets to become one of the world's top 5 renewable energy producers within the next decade. Their vision is clear. Lead the energy transition, not just follow it. And they're backing up their words with action, making real investments, forming strategic partnerships, and acquiring innovative companies in the renewable space. These moves aren't just for show. They're laying the groundwork for long-term dominance in clean energy. Yet despite all this progress, the market often overlooks TotalEnergies' green transformation, focusing mainly on their oil and gas legacy. This disconnect creates a unique opportunity for savvy investors to buy into a company that's undervalued relative to its future potential. With TotalEnergies, you get the best of both worlds, a stable, cash-generating legacy business, a fast-growing renewables division, and a juicy dividend, all wrapped up in one stock. It's a rare combination that's hard to find in today's market. But they're not stopping at solar and wind. TotalEnergies is also investing in next-generation technologies like green hydrogen and carbon capture. These innovations could be game changers for the energy industry, positioning the company for leadership, not just in the next 5 years, but for the next 50. Their commitment to shareholder returns is clear, with a robust share buyback program and a track record of increasing dividends. This shows management's confidence in the company's future and their dedication to rewarding long-term investors. In short, TotalEnergies is a global titan reinventing itself for a new era. They offer safety, reliable income, and serious upside potential as the world shifts toward cleaner energy. While others chase the latest hype or speculative trends, TotalEnergies stands out as a smart strategic play for patient, long-term investors who want both growth and resilience. The company has a market cap of about $136.7 billion and reported $195.6 billion in revenue for 2024. Net income came in at a solid $15.76 billion, translating to earnings per share of $6, and it's currently trading at a very modest PE ratio of 9.92. What stands out most, though, is the valuation gap. The current share price is $59.49, but its fair value is estimated at around $94.69. That's a 59% discount to fair value, a huge divergence that has investors paying attention. For those looking for exposure to traditional energy with strong cash flow and long-term renewables integration, TotalEnergies is looking more and more like a value play with upside. Don't sleep on this one. TotalEnergies is quietly but steadily building the infrastructure that will power our future. Their projects are reshaping the energy landscape, one solar panel and wind turbine at a time. The risk is cushioned by their established legacy business and reliable dividend, while the upside is driven by their aggressive push into renewables and new technologies. It's a rare blend of stability, innovation, and growth, making TotalEnergies a compelling choice for anyone looking to diversify their portfolio with a future-focused energy leader. That's why TTE is my first must-watch pick for August. If you're looking for a company that's not just surviving the energy transition, but thriving because of it, TotalEnergies deserves a spot on your radar. Next up, a US company that's making waves and dominating the clean energy revolution. Stay tuned. Our second pick is NextEra Energy, ticker NEE, the world's largest generator of wind and solar power, and a company that's become synonymous with the clean energy revolution in America. NextEra isn't just a leader in renewables, it's a trailblazer, setting the pace for the entire industry as the world transitions to a more sustainable future. It's also the biggest US electric utility by market cap, a testament to its scale, reach, and the trust investors place in its vision. NextEra's operations touch millions of lives, powering homes, businesses, and entire communities across the country. NextEra operates through two main segments. The first is Florida Power and Light, or FPL, which is a stable, cash-generating utility serving over 12 million people in Florida. FPL is known for its reliability, customer service, and its ability to deliver consistent earnings, even during economic downturns. The second segment is NextEra Energy Resources, or NER, which is the company's high-growth clean energy business. NER is where the real magic happens. This division is responsible for developing, building, and operating wind, solar, and battery storage projects not just in Florida but across North America. FPL provides a rock-solid foundation, while NER is the engine driving explosive growth. NER's projects span from the windswept plains of Texas to the sun-drenched deserts of California, and its battery storage facilities are among the largest and most advanced in the world. This combination of scale and innovation gives NextEra a unique edge in the rapidly evolving energy landscape. NextEra's development pipeline is nothing short of massive. The company has committed billions of dollars to expanding its renewable capacity, with hundreds of new projects in the works. This pipeline ensures that NextEra will remain at the forefront of clean energy for years to come, constantly adding new wind, solar, and storage assets to its portfolio. They're not just riding the clean energy wave, they're leading it with unmatched expertise, scale, and a proven ability to execute on ambitious projects. NextEra's team of engineers, project managers, and executives are recognized as some of the best in the business, and their track record speaks for itself. Battery storage is a true game-changer for the industry, and NextEra is at the cutting edge. By investing heavily in advanced battery technology, they're solving the intermittency problem that has long challenged renewables. This means wind and solar power can be stored and delivered when it's needed most, giving NextEra a huge competitive edge and making renewables more reliable than ever. Financially, NextEra is a powerhouse. The company delivers both growth and income, with a strong track record of earnings growth that has consistently outpaced its peers. Its dividend has increased by around 10% annually for more than a decade, rewarding shareholders with both stability and upside. Several powerful tailwinds are working in NextEra's favor. Government incentives for clean energy, surging corporate demand for renewables, and the rapidly falling costs of solar, wind, and battery storage all create a perfect environment for growth. As more companies and governments commit to net zero goals, NextEra is perfectly positioned to benefit. NextEra's disciplined approach to capital allocation ensures that every dollar invested is put to work, creating shareholder value. The company is known for its rigorous project selection process, only greenlighting projects that meet strict financial and environmental criteria. This discipline has helped NextEra avoid costly missteps and deliver superior returns over time. The recent market pullback has made NEE more attractively priced, presenting a compelling entry point for long-term investors. With its strong fundamentals and growth prospects, NextEra looks like a bargain at current levels, especially for those with a multi-year investment horizon. This isn't your typical slow-moving utility. NextEra is a high-growth, tech-driven powerhouse with a durable competitive moat. Its investments in digital technology, grid modernization, and advanced analytics set it apart from traditional utilities and position it for continued leadership. With NextEra, you get the safety and predictability of a regulated utility, combined with the upside potential of a fast-growing clean energy innovator. It's a rare combination that's hard to find in today's market. NextEra is shaping the future of American energy, driving the transition to renewables and setting new standards for the industry. For investors, now is a great time to get on board and participate in this transformation. With a market cap of $145 billion, NextEra posted $24.75 billion in revenue last year and delivered net income of $6.95 billion, with EPS at $2.88. The stock trades at a PE of 24.49, which may seem high compared to traditional utilities, but for a company pioneering renewable infrastructure at scale, that multiple reflects its growth premium. NextEra's current stock price is $70.53, and it's trading about 46% below its estimated fair value of $103. That disconnect has many investors reevaluating the name as a possible long-term hold, especially as demand for clean energy infrastructure continues to accelerate both domestically and globally. NextEra is often seen as a rare combination of stable utility income with forward-thinking green energy investments. To recap, NextEra is the world's largest renewables producer, has a stable utility foundation, a fast-growing clean energy business, and a fantastic dividend. It's a company that combines scale, innovation, and financial strength like few others. NEE is a cornerstone investment for anyone serious about the clean energy revolution. Whether you're looking for growth, income, or a way to align your portfolio with the future of energy, NextEra checks all the boxes. Buy and hold for the long run. NextEra is built for the future, and its leadership in renewables is only just beginning. As the world accelerates its shift to clean energy, NextEra is poised to capture even more opportunities. Now let's go global with our third and final pick, as we explore another leader shaping the future of energy on a worldwide scale. Our final pick is Brookfield Renewable, ticker BEPC, a pure-play global giant in renewable power. If you're looking for a company at the forefront of the clean energy revolution, Brookfield Renewable stands out as a leader with a proven track record and a vision for the future. This is a business built for the long haul with a focus on sustainability, innovation, and delivering value to shareholders. Brookfield's portfolio is one of the most diverse in the industry, spanning hydro, wind, solar, and energy storage across North and South America, Europe, and Asia. This means they're not just betting on one technology or one region. They're positioned to benefit from the global shift to renewables, wherever it happens. Their global diversification is a major strength. By investing across continents and technologies, Brookfield can allocate capital to the highest return opportunities, while reducing exposure to local risks like regulatory changes or weather patterns. This flexibility helps them stay resilient and competitive, no matter what's happening in any one market. Backed by Brookfield Asset Management, one of the world's largest alternative asset managers, BEPC has access to world-class resources, deep industry expertise, and a steady pipeline of attractive deals. This partnership gives them a unique edge in sourcing, financing, and operating renewable assets at scale. Their strategy is clear and disciplined: acquire high-quality assets, operate them efficiently, and develop new projects to drive long-term growth. Brookfield's team is constantly looking for ways to optimize performance, reduce costs, and expand their footprint in both mature and emerging markets. The hydroelectric portfolio is the crown jewel of Brookfield's business. These are long-life, low-cost assets that generate steady, predictable cash flow year after year. Hydroelectric power is not only clean and renewable, but also provides essential grid stability, making it a cornerstone of the world's energy transition. On top of this, Brookfield is rapidly expanding its wind and solar operations, with a massive development pipeline that stretches across multiple continents. They're investing in the latest technology and building new projects to meet the surging demand for clean electricity, ensuring they stay ahead of the curve as the world decarbonizes. Brookfield targets 12–15% annual total returns for shareholders, combining a strong, growing dividend with consistent growth in funds from operations. This blend of income and capital appreciation is rare in the renewables sector, making BEPC a compelling choice for both growth and income investors. Their dividend is a key attraction, growing 5–9% annually, providing reliable, inflation-beating income. For investors seeking stability in a volatile market, Brookfield's commitment to returning cash to shareholders is a major plus. The global shift to clean energy is a multi-trillion-dollar opportunity, and Brookfield is perfectly positioned to profit. As governments and corporations race to meet ambitious climate targets, demand for renewable power is set to soar for decades to come. Brookfield partners with leading corporations and governments to provide long-term green electricity contracts, locking in stable, recurring revenue streams. These contracts not only support the transition to net zero, but also give Brookfield predictable cash flows to fund future growth. Management's disciplined, long-term approach is a major asset for investors. Led by CEO 𝗗𝗓𝗏 and a seasoned executive team, Brookfield's leadership has a track record of navigating market cycles, executing complex deals, and delivering on their promises. BEPC is the preferred ticker for most investors, offering simplicity and fewer tax complications compared to other Brookfield entities. It's listed on major exchanges, making it easy to buy, hold, and track in your portfolio. Recent market headwinds, including rising interest rates and short-term volatility, have made the stock more attractively valued. For long-term investors, this is a rare chance to buy a world-class renewables leader at a discount, setting the stage for strong future returns as the sector rebounds. Brookfield's assets are real, cash-producing infrastructure powering communities worldwide. From city grids to rural villages, their projects deliver clean, reliable energy that supports economic growth and improves quality of life. Their balance sheet is fortress strong, with long-term, fixed-rate debt and investment-grade credit. This financial strength gives Brookfield the flexibility to weather economic storms and seize new opportunities as they arise. The demand for clean energy is only going up, and Brookfield offers pure-play exposure to this unstoppable trend. As more countries commit to phasing out fossil fuels, the need for renewable infrastructure will only accelerate. Their massive development pipeline gives visibility into future growth, with thousands of megawatts of new projects in the works. This ensures Brookfield can continue scaling up and capturing market share as the energy transition unfolds. Brookfield Renewable is with a market cap of just under $5 billion. In 2024, the company generated $4.14 billion in revenue and reported net income of $236 million. While the numbers are smaller than its peers, Brookfield offers something unique: a global portfolio of hydro, wind, and solar assets managed under the larger Brookfield Asset Management umbrella. For investors seeking pure-play exposure to renewable energy, especially in a long-term, infrastructure-heavy model, Brookfield is often viewed as a solid option. It doesn't have the scale of Total or NextEra, but its specialized focus and global reach make it a compelling part of a diversified energy strategy. This is a sleep-well-at-night stock: stable, growing dividend, huge growth runway, and best-in-class management. For investors who want both peace of mind and upside potential, BEPC checks all the boxes. In summary, BEPC is a global renewables powerhouse, offering diversification, income, and growth. It's a rare opportunity to invest in the backbone of the world's clean energy future, with a company that's built to last. Buying now could be one of the smartest moves you make this year. With a strong track record, robust pipeline, and a clear path to long-term value creation, Brookfield Renewable is a top-tier pick for any forward-thinking investor. Don't miss out on Brookfield Renewable, your gateway to the future of clean energy and sustainable investing. There you have it, 3 energy powerhouses ready to supercharge your portfolio: TotalEnergies, NextEra Energy, and Brookfield Renewable. Each offers a unique way to invest in the future of energy, blending stability, growth, and income. So whether you're looking at a deeply undervalued integrated giant like TotalEnergies, a renewable forward utility leader like NextEra, or a niche player like Brookfield Renewable, there's a clear theme here. The energy transition is creating pockets of opportunity, and many of these companies are trading well below their intrinsic value. The key is identifying which names fit your investment horizon and risk profile, and staying positioned for where the world's energy story is going next. Want to level up your investing? Check out my Value Stocks Investing Master Course, link in the description. For exclusive stock tips and in-depth analysis, join the Stocks Galore Patreon community. Now your turn. Which of these energy stocks has the most potential this year? Drop your pick in the comments. Like, share, and subscribe for more investing insights. Thanks for watching. See you next time.